And then, of course, a regular star on the show who soon will be giving us his, do you call that bi-monthly, Dave? Is bi-monthly twice a month? But we've been talking about how you're going to have your silver report new feature on the show. And that's Dave Kranzler of Investment Research Dynamics. So, David, welcome on in here. How are you today?
Doing well. Thanks for having me back.
Stein, why don't you kick it off and give us an overview as one of the people who is soon to be part of that supply going forward, what the environment is like and what silver investors should know.
Well, look, I think that they should know that it's very difficult to get supply. There's obviously Jorge here has been operating silver mines for several decades now. And it's difficult to operate them. It's difficult to start new ones. It's difficult to expand them. It takes a lot of expertise that, the vast majority of people and even people in our space don't have. And, then you've got to think about raising CapEx. You've got to think about permitting, which, nowhere in the world is permitting easy anymore. So there's a lot of challenges to coming up with new supply. And, that's not unique to silver. That's the whole resource space in a nutshell. And so when we do think about, what will happen when silver prices go a lot higher, which I think they ultimately will, it's going to take the industry like many, many years to really react and increase supply. And until then, I think it's going to be very, very tight.
Okay, and Jorge, I'm going to pull up. Here is the Silver Institute supply and demand numbers, which show, let me see if I can move our tickers out of the way. It shows a deficit the last 2 years. They're 251 million ounce deficit, 126 million ounce deficit forecasted for last year. I guess they'll have the new numbers soon. I know there's some debate over how accurate any of the silver numbers are because it's not, always such a finite quality where everything is reported. Do you feel that the market is in a deficit? Do you use those numbers? Is there anything else people could be well served to look at as a better indication? Because at least seeing them report a deficit, seeing it getting harder for the miners, seeing inflation soar, yet the price sits there while every other asset on the planet moves. So what could you say about those numbers and anything about that?
I think if we look at different sources of data, they all seem plus minus tell the same story. If we look at mine supply for the last decade, supply has not grown in any material way. It's basically flat, if not shrinking. If we look at expected mine production for 2022, it's about 780 million ounces of silver. If we look at, 2014, it was 795, almost 800 million ounces out of mine supply. So to echo what David says, the business is not getting any easier. We are all, across all industries, but extractive industries in particular, measured against a heightened standard with respect to permitting and the complexity to bring these new deposits into production, right? So timelines have extended, capital, permitting, access to capital, permitting, everything has become more complex. And mine supply still is basically flat, within a narrow band, oscillating between 800 million ounces, 760 million ounces of silver annually. So mine supply is not growing, and we don't see any new large expansion of mines anywhere on the silver space. No, we don't see it.
And I have pulled up here, you can see the supply side where about, looks like the mine production has hovered almost up to 900 there, but then back down. So somewhere around the 800, 900 mark.
It's flat.
There's the
Yeah.
recycling. You see the total supply down here, pretty steady at 1 billion ounces a year. So Dave Kranzler, anything you can add to what they just said there?
I mean, first of all, just to reiterate your point, it's really difficult to put, to find accurate numbers on what the actual supply is of silver, what the above ground amount of silver is sitting in investor hands, et cetera. But one thing, I guess, maybe to the point of, the fact that silver production output's not increasing from silver miners globally, is that I haven't really heard people talk about the cost side of the equation. And we're just now starting to see the effect of price inflation, higher energy, et cetera. More owners, permitting standards, that makes it more expensive to get a mine permitted and constructed. And unless the price of silver rises high enough, I have to think that mines that are marginally profitable at $25, $26 silver, if expenses keep rising, some of that output is going to be shuttered, because you're not going to run a mine at a operating profit deficit for very long. Does that make sense?
That makes a lot of sense to me. It doesn't, I mean, the banks seem to be okay with that, although as we was looking at, and I'm going to pull back up the Silver Institute, I see an interesting note here, which I'll have a question on this one, and all three of you can take a crack at that. And then we'll open this up to questions from the audience, really get their questions answered, which I think would be most helpful. But here you see the Silver Institute works with Metals Focus Team, a leading research company based in London. Now, Dave, I think you're familiar with Metals Focus. You've heard me talk about them plenty on the show, because last year when we had this silver report from the LBMA following Silver Squeeze, you see LBMA acknowledges Metals Focus contribution to this report. And if we scroll back up to page 6 here, we can see that following Silver Squeeze, as the social media frenzy gathered pace in late January, demand for coins, bars, and ETPs, exchange traded products, which I think is how they label the SLV and other fraudulent funds. Global holdings surged by 119 million ounces in just 3 days. Now, Dave Kranzler, as you remember, we talked about that the week that it happened and said it was impossible. And sure enough, LBMA says there was a miscount of almost the exact same amount a couple months later. I actually did reach out to them to see if they wanted to come on the show and talk about it. You can believe I'm still waiting for their answers, along with Jeff Curry and Ross the Boss Benham of the CFTC. Yet in the end, given that most of the metal was allocated in London, fears emerged as to whether there was enough silver should demand continue at this pace. Then they also go on to mention it would only have been a matter of weeks before London's existing stock was used up. And then again, I'll point out, these are the same guys that are contributing to the Silver Institute numbers here. So at least using the banking industry's own numbers, they're saying there's a deficit. They're saying they were getting their teeth kicked in last year during Silver Squeeze, and they were close to running out. And I just wonder how that ultimately gets resolved. I know how it should get resolved, but Dave Kranzler, why don't you take that one first, and any thoughts you have there?
I mean, again, it's kind of first of all, we don't really know what the true supply of silver is sitting in London vaults, right? I mean, we don't know to what extent it's fractionally allocated. I mean, what you just discussed there points to the fact that, it just reemphasizes the fact that we can't really trust the numbers that we're seeing. And a lot of it's by design. want to keep this as opaque as possible. Another thing that I had thought about this morning is that India has not been importing a lot of gold right now because when the price runs up as quickly as it does, they go into hibernation. They go into price shock. But what happens is they substitute silver. And so a lot of times when you see that they're not importing gold, India is importing a lot of silver, and that doesn't really get accounted for either. So, my guess is, what you were explaining is that, even by the bank's numbers, we're running at a supply demand deficit, and the real numbers, just like the real inflation numbers versus the CPI numbers, the real numbers are probably a lot worse than what's acknowledged officially. And again, to your point, this can only be resolved one way, which is with a much higher price of silver, and it's just a matter of time before we see that.
Jorge?
At the end of the day, I think when we look at different sources for data, the Silver Institute certainly is one, CPM, and I tend to look at CPM numbers. And what we see is, production flat, supply around 900 million, industrial demand. So there is a small surplus, you would argue today. And the big question is investment demand and how that investment demand today that should be driving higher prices in the context of the inflationary environment we're in the context of the geopolitical tension we're seeing worldwide, is not driving prices, right? And how the inventories play here, it all can get quite complex because there is not a lot of visibility as you guys just described. There is not a lot of visibility on all of that. So I think the big question is, in light of the supply that we're seeing, give and take, in light of the industrial demand we're seeing, give and take, what we're missing to drive higher prices is really more activity on the investment demand. And we see investment demand lower compared to what we saw in 2011. Why? Perhaps there is, other assets, perhaps lithium, Bitcoin, I don't know, where money has flocked to, right? But you're creating probably bubbles there as well. Tesla, Netflix, we know what happened with Netflix this week, and what has been happening with them. From they're 60% down from their peak. So, money, I think, has been seeking returns in other places, and probably creating bubbles in other places. And what I believe is that eventually we will go back to fundamentals and find refuge in the precious metals. But I think what we see today is investors with lots of options, even still today, and those bubbles might be. Now, the fundamentals of how the inventories are moving and the ability of the exchanges to meet their responsibility in the trade of the metals in the derivatives market, I think it's questionable, absolutely, and it can lead to something like what we saw in nickel or whatever. But the fact is that at the end of the day, we're not seeing still the investment demand come in as we've seen it in other cycles.
Well, on one positive note, perhaps that will change. Whoops, did I get the right screen share there? Because as you can see here, Dave Kranzler, I'm surprised we were able to get you to join this call, because with Netflix down 37% and knowing your short sellers journal, I mean, are you the new Warren Buffett, or Elon, did you pass your buddy Elon Musk in wealth, and now you can come buy out the silver supply? It's impressive that you are still here today. Although David Stein, I think I'm going to let you take a crack at the first question that comes in. And since this is a roundtable Q&A, please start firing your questions in. I'll stop asking mine and we'll get those. Quick note, the Goldman executive who helped create the Marcus brand. I know nothing about this. This is not related to me. But before, maybe to set up some of the questions along with what you guys already said, I know many people have seen this. Jorge, I don't know if you and I have ever, if you've seen this in particular, but along the lines with what the LBMA was reporting, later we found these clips. This is Ross Benham, the commissioner of the CFTC, who's supposed to be regulating the market, making sure it's freely trading. And he has two comments here that were interesting. And then if people have questions about that or the supply, we'll open it up. But I'll play these real quick. And
in many respects,
actually, let me make sure I have and queued up properly. So, and we can hear not only what happened, but showing why it happened and who was concerned, as I think that's quite relevant. So here we have Ross Benham.
And in many respects, the resiliency and the market structure of the futures market really were able to tamp down what could have been a much worse situation in the silver market.
So that's him talking about what happened on February 2nd. This is the commissioner who's just supposed to be making sure the banks aren't cheating. And Dave, you know, we can talk later if you can find any way where that's not price fixing. But again, I'm actually going to post his entire talk about that. It was about 5 minutes long because, you know, you have these excerpts here, but he clearly mentioned the market structure that takes some sort of action to defy what supply and demand is doing, and also mentions how scared they were, which to me indicates that Dave Kranzler, we've talked about, yeah, we think the government knows about silver manipulation. They're looking the other way. These words confirm that that's not conspiracy theory. We're not making that up. And here, play this one's about a minute, and then we'll dig into the questions about this or supply or anything else that is on someone's mind. So one more clip from Ross the Boss.
We have sort of history and precedent in the futures space. You know, we have a match order book, don't have rules. We have T+1 settlement. The clearing infrastructure as a general matter historically within the futures space is built in and very strong initial margin, daily mark to market, position limits. All of these things together, I think, really were very effective in managing what was at some point in those few days in late January potentially a challenging situation, and give credit to the for utilizing its authority and some of the tools it has within the margin space to control the sort of the price and the volatility of the silver contracts.
I think that's the key part, to control the price and volatility of the silver contracts. And I might, one last point here, this isn't just some banker. This isn't Jeff Christian or Jeff Curry from Goldman running his mouth. This is Ross Benham, the CFTC, one of the members of the working group on capital markets that Reagan created in 1987 when they were doing the same thing, printing money, and the housing bubble imploded then. And when you hear, oh, the powers that be intervened in the end, they did this, they did that, it's Ross Benham, Gary Gensler, the head of the SEC, who missed silver manipulation when he was with the CFTC, Janet Yellen, Treasury Secretary, and a member of the Fed. And now we just heard why the silver price is being capped. So with that said, let us look in see what questions have come in. Dave, I guess the first one, Dave Kranzler, will be for you, because who was it that asked here, Wildcat 7, will the Crimex paper manipulation ever be exposed? I like to think we're exposing it to some degree now and continuing to do our part, but I think that goes in line with the clips you just saw. So Dave Kranzler, and why don't you go first on that? And again, people at home, if you have questions, start firing those in, and we'll get to as many of those as we can.
I mean, the corruption on the COMEX has been, GATA's been writing about it and trying to bring it to everyone's attention for over 22 years now. And I think more people are aware of it, but this is such a small space in terms of investors. It's like, something like 0.5% of all financial assets globally are invested in the precious metals sector. And that includes everything, miners, gold, silver, et cetera. So until people get fed up with, stocks like Netflix blowing up in their face, the volatility of Bitcoin, I personally believe Bitcoin is going to go lower, but that's neither here nor there. At some point, there's going to be a lot more attention put on alternative investments, and the obvious one is precious metals. They're the easiest to invest in. So I've kind of come to the conclusion that the only way this ultimately gets exposed is at some point you'll have the physical market overrun the derivatives market. And I ran some numbers this morning just in case there was a good point to bring them up. And if you look at the open interest in COMEX silver futures, and I'm just looking at the front month and then the next big delivery month, which is July. So it's not the total open interest in silver futures. There's 150,000 contracts of open interest, and that represents 750 million ounces of silver. So, almost as much as the total projected mine supply for 2022, right? Well, then you go and you pull up the warehouse report for the silver stock on the COMEX, and in the registered category, there's 86 million ounces of silver that allegedly is available to be delivered into those contracts. So what it's going to take is, if you just had 10% of that open interest between May and July stand for delivery, you'd blow up the COMEX. So until that happens, and I don't even know that it might not be the COMEX where it happens. It could happen over in London. It could be any number of things where you get a visible delivery default. And then all of a sudden, everybody realizes at once that everything we tinfoil hat conspiracy theorists have been saying for the last 22 years is true. It's like it's a slowly and then suddenly moment. And I think that's how it's going to happen. Now, the mining companies could help with this if they would just stockpile some portion of the silver that they produce. Although I do understand that, it's also, a lot of mining companies need to sell what they produce in order to reinvest in their business. So, that's kind of a double-edged sword there. But there's certainly some large silver producers out there that could probably withhold production for a while. And I think that would help drive the price higher.
Well, Dave, it's interesting you mentioned that because we know First Majestic has done that, Endeavor Silver has done that, a few others. And one of the things that
SSR Mining has.
Yeah, and at least, having the show here, interacting with people in the audience and the companies, I haven't mentioned this publicly before, and we're almost ready to unveil it, but at the request of some of those groups, have been putting together a shareholder petition. We're updating this and getting it ready, but just one of the requests I've had from one of the companies was that if there's a way that shareholders can say, oh, yes, we support, even if it means we're going to have lower revenue in the near term, we see what Ross Benham said. We see what the banks are doing, and we're willing to support that from a shareholder perspective. So I'll have more on that as that's a little closer for launch. But David, Stein, or Jorge, I know that's could be an intrusive question of sense, but would either of you care to comment on that or anything that Dave Kranzler said?
David, you want to go first?
Sure. I can comment. Look, what do you want me to comment on? Withholding silver?
If you care to, I understand there's certain things you can or can't do on as a business, but if you'd like to.
My company, we're not in production yet. We're working on reopening a mine right now in Peru. So obviously that's so we're already withholding our silver in that sense. But Look, I think the amount of silver that the pure silver companies like us, like Fortuna, First Majestic, actually produce, as compared to what's what the global market for silver, it's relatively small. So I think it's more of a token kind of thing to do, and I'd be and I'm speaking out of turn here, but I would be surprised if they are able to hold it on their books for more than a few quarters without having to sell it. So I know that they have done that, but the question is, are you able to, the silver price hasn't gone up yet, so are they able to, quarter after quarter after quarter do that? Probably not. So look, I think probably the best thing that shareholders can do, if they want to support, the silver price, but besides buying their favorite silver miners and supporting them that way, is to buy the physical silver themselves and to take silver off the market that way. That investment demand, as Jorge said earlier, is, that will make up the gap between the industrial demand, which is growing, and that is a very, very good long-term story as well. But the gap between supply and demand is filled by the investment demand. If we get a lot of investment demand in any given period of time, for whatever reason, macro reasons or whatever, I do think it will have a big impact on the silver price. And maybe we could be just one sort of black swan or exogenous event away from really breaking the market, much like we've seen nickel recently. Palladium saw it, I think it was a year or so ago, when the palladium market really sort of broke out of a lower range, and then it moved higher, and it actually stayed there. It wasn't a little blip. The palladium price moved from like 1,000 an ounce to like 2,000 an ounce, and it stayed there. And I think you'll see probably the same thing for nickel, and we'll see it for other metals too.
Yes. Go ahead, Jorge.
Yeah, if you allow me for a second, I think Keith's initiative is commendable, but absolutely in line with what David is saying here. About 1/3 of world mine supply comes from what we would call primary silver producers. Right. But in reality, the primary silver producers, Pan American Silver, First Majestic, Fortuna, or silver contribution to revenue ranges between 20 and 40%. So, and we, the primary silver producers, where silver accounts for only 30 to 40% of sales and revenue, account for 1/3 of world mine output for silver. 2/3 comes from either large copper mines or zinc lead mines. No? So 2/3 of world mine silver supply comes from large copper and large base metal mines. Silver loves galena, which is a lead mineral or mineral, right? So large lead production usually comes with significant silver production. Large copper production usually comes with significant silver production. So to make a dent on silver availability, primary silver producers do play a leadership role. Yes, so I think Keith's initiative is commendable. But I echo what David said. Really, if you want to make a dent, you need to get to the base metal producer. But you know what? Most of them have already streamed their silver and give it to the Wheatons and royalty companies of the world. So they are not going to hold anything. So we are trapped in a situation there that needs to be well understood.
Yeah, well said, Jorge. Actually leads into our next question, because as I was putting that petition together and thinking about it, I agree completely with what all of you said. And fortunately, is one of the reasons why we'll be reaching out to the non-primary silver miners, because this is guessing maybe one of you guys would have more insight, but I would imagine it would be easier if the majority of their revenue is coming from nickel or copper, whether they withhold all of their silver or even just part of it on the percentage basis, that could add up more. And I get the feeling that from my conversations, I'll leave this one nameless, but one large silver producer that I talked with last year, and I mentioned, do you guys, I get a lot of shareholders that are asking, why are you selling the silver at the reduced price? And he said, well, I get it. I hear that that's probably happening, but what can I do? My job is to get silver out of the ground at the lowest price, which is true. And again, as the people in the audience have mentioned, we've talked about today, whether you call it exposing or sharing the truth, or that's why behind the scenes, when I'm not doing the show, we've been doing a lot of things we'll unveil soon that lay these things out clearly. So it's not just saying, hey, you should stop selling your silver, the price is being rigged, but hey, here's the specific data points. You look at it, you make your own decisions. Jorge, I don't know if you had seen those clips of Ross Benham of the CFTC before, but imagining you're thinking, gee, something doesn't sound right about that. Is that fair to say?
Yes, no, absolutely. I mean, we all have questions regarding what's happening there with the positions. It's a complex subject that it takes a lot of studying but you also have the commercials with long positions which hedge their inventories, and that's also a big part of the hedge. And those are not speculative hedging, but commercials, no? So I mean, I agree there is something that doesn't smell right there, but going back to fundamentals for us. As a producer, my responsibility is to be able to deliver silver and gold with significant returns for my investors throughout the precious metals price cycle. And in the meantime, advocate along with all these causes. No? Yeah.
Well, that makes a lot of sense. And I guess we kind of answered USB and first tries question to some degree, but I'll read it. And whoever would like to comment on that first. When the recession hits, and I think he's suggesting that with interest rate hikes on the horizon, or at least being threatened, so when the recession hits, how will lowered base metal demand affect the inevitable silver pool, being that more than half of silver is mined as a byproduct? Anybody in particular like to take that one?
I can take it, or I'll start. Look, he makes a good point. If we got into a recession and that affected base metal demands negatively, then you would see less silver supply as well. No question about it. A significant portion of silver production comes from byproducts of base metals. And so that is something to keep in mind. In a sense, silver, is a potentially good hedge in that scenario, because probably you'd see strong demand for silver, and maybe after a little bit of a hiccup like we saw in 2008, but then strong demand combined with less supply, it's definitely a recipe for much higher prices. One thing I would like to just make people aware of, geologically and in terms of the trends of the mining industry that we've seen over the last few decades, although there is a substantial amount of silver being produced as byproducts, the share of silver in base metal mines is going down. It's going down in copper mines because we're shifting more towards lower grade open pit copper porphyry deposits. which, although they might have minute amounts of silver in them, it gets to the point where the grade of silver is so low you can't recover it, or you can recover very little of it. Maybe 20% of it or something like that gets recovered. So that's a long-term trend that's still happening and it's not going to change. And then the other thing we're seeing in with the lead zinc market, lead zinc is geologically tied together, but because zinc is much more used and the price is a lot higher, you're seeing much more investment going to zinc mines now. And most zinc mines have lower percentage of silver than lead mines, than a lead dominated mine would. So you're seeing, whereas maybe 20 years ago, it was 1-to-1 zinc to lead production. Now it's maybe 3-to-1 zinc going to 5 or 10-to-1 zinc. And when you do that, you actually produce less silver as well. So the trends in the mining industry are actually very favorable on that front for silver. I think we're going to see over the next decades less, certainly we're going to see less contribution of silver from base metal, and it's going to be dependent on us who have primary silver mines to fill that gap at higher prices.
Well, David Stein of Kuya fades back from 3 and swishes the jumper. Nicely done, sir. It's actually quite a pleasure for me sometimes listening to this and hearing. It's kind of like silver mining school. So I thank you for that. And I was thinking, gee, I'm going to have to re-listen to this with my notebook because a lot of good info you're putting in there. I'm going to start switching to one guest answer per question so we can cover more. And Dave Kranzler, I think Drew woke up this morning and said, I'm going to get the bear riled up. This question is meant for you, without a doubt. Drew asks, why do precious metals investors put so much stock into inflation data when the average person is too stupid to understand that they should be worried about it? So I think Drew's feeling that same frustration we all do. And what do you say to that one, Dave?
I mean, I don't put any stock in the inflation data. I mean, I know the real rate of inflation is a lot worse than we're being told it is from official sources. What I see is that there's been a massive devaluation of fiat currencies, all fiat currencies. Some are worse than others, like the US dollar. And the best way for me to hedge against that is to own and possess physical gold and silver. So, I don't really live from CPI report to CPI report because it's a rigged number. It's a phony number. What I do know is that, I follow John Williams' alternative CPI, and the inflation rate that he's posting, which was how the inflation rate was calculated in 1980 by the BLS, is running more like 17% annually. So, and that's closer to the price inflation that I'm personally experiencing in my everyday life. So, again, I think we all know why the price of gold and silver is probably artificially lower than it should be. And, what I put my faith in and my stock in is that one of these days that issue is going to be resolved favorably for people who own physical gold and silver and possess it. That's a really important point because I had a subscriber who was panicked. He emailed me about 3 or 4 weeks ago. He was keeping silver in an IRA with an IRA custodian, and they were keeping it at a to be unnamed depository in Delaware, which also services the COMEX. And he was panicked because he decided he wanted to cash out the silver portion of his IRA. He felt more comfortable having it in his own hands. And he got stonewalled for almost a month, and it took him almost a month to get his silver delivered to him. And it wasn't 100% of the same silver bars the same type of silver bars that he had bought to be held in his IRA by this vault custodian. So, I'm hearing more and more stories like that. And again, to me, it just underscores the fact that if you think that your silver is safe being held by a custodian, you're wrong. And one of these days people are going to learn a painful lesson about that.
Yeah, it's interesting you mentioned that, Dave. And again, this is a little biased. I spend more of my time talking to people in the silver world than outside, although just some of the conversations I've had recently, and this is definitely more. But I think it's starting to build the stuff that happened with here this year, the 8-9% inflation reports every month, where I'm hearing from people who are scared now. And I never want it to be like fear mongering a show or anything like that, but just some cases rightfully so with what's going on. And but I am hearing that, and perhaps we'll see what it takes before the mainstream. But even on Wall Street, they see those CPI reports, so we'll see when that clues in. Although, fortunately, Jorge, we have a question that came in that I think would be perfect for you. This is from Jay Agar, asking silver to gold 20-to-1 ratio again soon. And I think that'll be perfect for you because you guys are already in production over at Fortuna Silver. You have gold and silver production, so probably few people on the planet more qualified to comment on this one than you.
You know, the last time, Jay, we saw the silver to gold ratio in 20-to-1. If I am on a monthly average, if I'm not mistaken, we have to go back to 1980.
Yep.
No?
That's correct.
Yeah. So, you know, I think we all have here conviction that the ratio cannot continue as it is. We need to see, you know, and traditionally silver lacks gold. So there is nothing unusual in the general trend when investors start flocking to precious metals. Usually gold takes the first leap, and then silver follows, and then silver gains more momentum. That is sort of a pattern that we have seen, and the ratio, you know, closes. And at 78, the ratio is still high compared to historic standards. I think all our expectation is that silver will continue to move and close that gap with gold, and we can see ratios trending more towards the 60s. And then with the kind of world we're living in, I wouldn't be surprised if we get to see significantly lower ratios for the two metals. And that's something where I have a high degree of conviction. The question is when, right? And I believe that if those conditions that would drive that are not met by the current world and economic environment, what is? I think we're at the verge of something significant happening. And that's just my opinion based on the information that I have at hand. But again, 78 in the ratio, which is what we have right now, is high and still is not reflecting, as we're discussing, silver catching up to its fundamentals, right?
Well, that makes a lot of sense. And actually, I have two questions that are somewhat tied together. David Stein, I'll send these over to you. And Jorge, I guess you can also comment as well, because Neil Hahn says, what is, I think he was asking in relation to Fortuna, what is their relationship with the government these mines are located in? And then Dan Ibragimov says, what is the chance that these countries nationalize their mines? So we'll lump that into one question of the government impact. David, you're in Peru, where I know that's something you have to keep an eye on. So why don't you take that one first?
Sure. So I think, look, I guess in Peru, they'd have to change the constitution. I think every country is different, first of all, how that mechanism would work. But, you know, in Peru, they actually can't do it without changing the constitution. And the process to change the constitution is very long and laborious. But it could be done if there was enough political will. So it's not something we're looking at right now on the horizon. It's sort of, if you go through history and, if you start making the case that silver might be some kind of a strategic metal, either for green or electronics or military or something that's vital to society, which you could make the case that it is on all sorts of different fronts, then that's something that could happen in the future. And I think if whether we're talking about Peru, we've also got a project in Canada. Which Canada's nationalized stuff in the past too. If they're buying our mines from us and the silver price is $100 or $200 an ounce, I'll take that.
Jorge, do you have a comment on that one?
Me too.
Yes, absolutely. First, I am taking this interview from our Lima office in Peru. So I'm currently taking this call from Peru. Just conceptually, I think we all need to understand and be comfortable with one fact. Mining has always been a frontier business, right? And investors and participants in the industry need to be comfortable with need to have some stomach. We started this conversation discussing how difficult it has become to get the metal out of the ground, because we are not where most mines are located, in places that you would consider frontiers. And we would all love to have a mine on the Walker Lane in Nevada, but we forget that Nevada was the Wild West at some point, right?
Yeah.
Right. So to talk about Peru and Mexico, Mexico today is the largest silver producer in the world. It has an output of about 190 million ounces of silver annually, roughly. Peru is the second largest silver producer in the world, 120 plus million ounces of silver annually. These are countries with long and proud mining traditions, no? And short term, you can see a lot of political instability. But longer term, I believe, are places where it's not easy to work, but it's the places where the assets are. And we as miners need to be there, right? So it takes skill, stomach, and staying power, tolerance, ability to interact with governments in these jurisdictions. We're currently operating in West Africa as well. And West Africa is not for the faint of heart either. But West Africa has established itself as the second largest gold-producing region in the world over the last decade. Now, there was a coup in Burkina Faso in January. Our mines didn't get bugged by that. We didn't lose one operating day. But so the point is, at the end of the day, mining is a frontier business. Investors need to be aware of that. And short term, there can always be a lot of political noise. I don't see any immediate or latent threat of nationalization in any of the jurisdictions where we operate. I don't see that. The Mexican president came this week announcing the nationalization of lithium.
Mm-hmm.
But probably no one has told the guy that Mexico doesn't have lithium reserves. Outside of that, I don't see any threats to the metals industry in the countries where we operate.
Unless Kranzler gets feisty and shows up with his truck.
You know what? It brings up the point. I mean, since I jumped into this sector in 2001, that's all people worry about. Oh, nationalization of the mines, confiscation of my gold by the government. And it's just noise. I just don't see it happening. And if it did happen, as David pointed out, he put $200 on the price of silver. If government started nationalizing these mines, it would go a lot higher than that. But I actually had a subscriber who emailed me this morning, all freaked out about that lithium nationalization thing, and I didn't know that Mexico didn't have any lithium reserves. But I just said, look, the mining interests, the precious metals mining interests in Mexico are, a lot of them are very wealthy businessmen. I don't think they're going to let their mines get nationalized, and I wouldn't worry about it.
Now, Dave, we have a flurry of questions coming in here as we get close to wrapping up. Although, first of all, Dave Kranzler of Investment Research Dynamics, is it true that soon, in addition to offering the Mining Stock Journal and the Short Sellers Journal, you're going to be offering a service where people can hire you to be their own personal vault guard? So I just imagine if someone tries to nationalize Kranzler's silver, he wheels his tank out. And is that something? So question number one, is that something that investors can find out about at Investment Research Dynamics? Question number two, on a somewhat more serious note, USB asks, which future tech that uses silver are you most excited about? And then I know this is a handful, but the third part, we have Carlos in Lima, Peru, who wants to know anything about your sweater collection, what we can look forward to in the next appearance, anything like that. So why don't you take it from there, sir?
Hi, Carlos. Not going to let that sweater thing drop, are you?
I may have egged him on that one, so it could be me. So
Carlos and I bet on soccer together. He's made me money in betting on soccer, so he can abuse me about the sweater. You know what? I don't know that there's any specific future tech that I'm excited about that's going to use silver. I mean, I think everything, as the world becomes more tech oriented, everything's going to need silver. It's going to need, all kinds of rare metals. And to that extent, I think silver is probably going to become more rare down the road. But that's what's so exciting about silver, is that it has, I think, something like 70% of all silver produced is used for industrial purposes. Okay. And that obviously includes technology, solar installation, et cetera. And all that stuff's going to keep growing, whether we want it to or not, as ESG initiatives get shoved down our throat. But it also has the investment component. So it's got a dual component. And in my opinion, silver is extraordinarily undervalued relative to gold. It's extraordinarily undervalued relative to any possible financial asset you could compare it with. And so, to me, I think silver is one of the best investments that you can make right now.
Well, I agree. I'll add one note to what is the technology I'm most excited about that really you can't share with the world without sterling silver, because I'm 43 years old, and I have my nights wondering what is the purpose of this life journey. And fortunately, it was nice in my 40s to see my destiny realized, to mint a silver Ben Bernanke figurine statue, where when you see it up close, the precision the artist got, you can actually see the $100 bills flying out. Look at Ben's tie there swirling in the wind. And Jorge, not to get you too excited early on a Wednesday, but both of those propellers do spin. So that's big technology right there that I'm certainly excited about. And last thing I would like to mention, maybe not a question, but if anyone has a comment, and then I'll give each of you guys a few minutes to let folks know where to find you and any updates that you'd like to pass along. But just in terms of some of the headlines that were coming out in the last day, here, precious metals miners mauled amid talk of more aggressive Fed rate hikes. And I'm not saying that there's not some degree to which that didn't actually play out, yet the idea that a bunch of Federal Reserve governors who have already been caught front running their own monetary policy, along with Goldman Sachs, I mean, it's about as fraudulent as you can get. They run their mouth, oh, we're going to raise 75 points. We're going to raise 100 basis points. And I guess, it gets algorithms that don't have a human behind it responding. But seems a little bit silly, where what does this have to do with supply and demand when these guys run out and lie? And again, here's one other thing that, Jorge, you kind of touched on this before with, does money go to Bitcoin or other places? and IAU and GLD glitter amid market turmoil, it's almost like another fractional reserve way. All right, if people have interest in gold, here we can park them into this thing. That's not going to impact the price, which, again, a lot of unfortunate things. And it's, the goal in doing this show isn't just to sit there and complain about how the market's manipulated each day, but again, like you saw with the petition and other things that we're doing, trying to find ways so that at least people know what they're getting into, and that the people like Jorge and David in particular, who are tasked with getting silver so that we can still have houses, computers, electronics, or any of this green stuff. Again, I admire the challenge that you guys face, because it's not easy. It's certainly frustrating. I know you guys, shareholders who are upset because Ross Benham's tamping things down. They wonder why the share price is down. You're doing your job. And so anyway, that's the emphasis that we're getting at with a lot of the things we do here. And anyone has a comment on that or anything else, or when wrapping up, anyone would like to share updates about their projects? David, would you like to go first there?
Sure. Let me talk about the ETFs and I'll transition that. Yeah, look, I think we've seen just in all investment products over the last 20 years, just an explosion of the ETF market and the passive investment market. And, it's still a kind of a go-to thing for people who want to invest in any possible kind of strategy. The first thing they do is look up what ETFs are available, right? So, it's something that, at the end of the day, if you take it to the extreme, you need companies like us, like Fortuna, to actually run real businesses in order to have equity ETFs. So if you take it to the extreme, I mean, everybody buys ETFs. There won't be any companies, right? So it's there's got to be a balance there, and I would just encourage people who are watching, who are interested in the mining industry, to look at investing in real mining companies, and you can start with the big cap companies. In the silver space, Fortuna, First Majestic, Pan American, look at those guys. And then, hopefully some of them find their way down to us smaller guys out there. We are building a real mining company. We're not just drilling holes. Drilling holes does not, although it can be exciting, it does not produce any silver, and it never will. We think we're onto a project that can make real money and will produce silver, very shortly. So that's our mission, and we can deliver on that and make investors money. That's what we're trying to do.
And David, one last thing. When we talked a week or two ago, you had mentioned a note and something you were happy with how it was going in terms of your permitting. Could you touch on that? And we also have your recent press releases pulled up. I've been excited. I think a lot of other people have been excited that you've been able to use your balance sheet and expand your access to some of these projects at the lower price. So anything there you could touch on?
Yeah, look, I mean, we since you got it right up there, we had a very eventful Q1. First ever mineral resource on the Bethania project we had. We got our construction license, which is, it's a key permit that will allow us to construct our new mill and tailings facility at the Bethania mine. And then we started discovering more, actually gold and silver at the Bethania mine, over and above what we have in the mineral resource estimate, with some of those surface vein discoveries that we press released in January and March. So look, I mean, we're kind of firing all cylinders on the technical side, which is all I can ask of of my team, and they're doing a great job. And it's not getting reflected in the market right now, but that's okay. We'll get there.
Well, I appreciate that. Appreciate what you're doing. And Jorge, I know the pressure's on you a little bit here because you have a fund manager and shareholder on screen, or possibly multiple. well, definitely multiple. But to anything to say in regards to Fortuna or anything else we talked about today while Dave Kranzler listens, and you can give us a quick update.
Yeah, just the message to our investors that we've been talking about the why silver is not moving higher and on our expectations around the higher metal prices. But Fortuna is running a tremendous business at these prices. The fundamentals of the business and our margins in this price environment are very strong. We produce about, our guidance is to produce about 400,000 ounces of gold equivalents in 2022. 69% of that will be gold and 22% of that will be silver. And we run the business with an EBITDA margin of 47-45%, right? We're generating strong free cash in this price environment. So our message here is investors can time when they come in and go out a sector, but we are long every day, right? And we've been long in Fortuna for 50 years. And personally, I've been long precious metals for 3-4 generations now, because that's our business, right? So my job is to provide first-class optionality to the investor. So we have to perform throughout the precious metals price cycle. We have to have an exceptional business in a rising price environment, and we must have also an exceptional business in a low price environment, while we wait for fundamentals to get aligned and the rigging of the markets disentangle. But we are here every day and we make money. We have crafted a portfolio of assets, a diversified portfolio of assets that can perform and deliver for our shareholders in any price environment. And that's a message.
I agree, and that's something, Dave, I remember that interview we did, just you and I, about Fortuna a couple of years ago, and you were discussing that, and it's easy for me to buy some call options on maybe a marginal product where if silver jumps, you get a high rate of return. But again, for the companies that, really have to plan their business on, hey, well, silver's here, whether I like it or not, or whatever Ross does. So again, I appreciate you being here with us today, Jorge, and at fortunasilver.com. And Dave, as we wrap up, and you can let folks know about the things you offer, although one thing that I wonder if you would agree with this, because obviously we talk a lot about silver, it's not the only part of the economy, yet what led me to that is that if you really go all the way down the trails of all these other markets, to me, it seems as if everything hinges upon the resolution of everything we've been talking about, with Ross tamping down the price, the supply of silver, that these guys mention, even say that they're scared. And we know why, because they're funding everything with paper dollars. So I get it. It feels sometimes the silver market reminds me of like passing a kidney stone, where it's like this thing just moved, so that all the, these wars that are getting funded with printed money, all this nefarious stuff. So Dave, any thoughts on that? Is that fair to say that so much of it hinges on the resolution, the stock market bubble, the bond market bubble? All this changes once we see a realistic silver price. So any comments on that? And then what do you say about investment research dynamics?
Real quickly, forget about investment research dynamics. Just go to my website and you can see about my newsletter.
Oh, look at the humble.
Well, I had these two guys here. I was just wondering if I could ask them each a quick question. But to answer your question really quickly, it's, again, I just go back to, it's going to be the slowly then suddenly dynamic that causes this resolution. And just go read the last 100 pages of Atlas Shrugged, and that's how I see it happening. But David, I looked at
Government doesn't know how to work a silver mining tractor. Just they're not going to know how to do it. They're going to need these guys.
David, I looked at Kuya a couple of years ago, and it ran up really quickly. And I kind of set it aside. So I'm like, oh, well, I guess I missed the first part of the Lassonde curve on that. And now I'm looking at it. I was just looking at a chart of the stock price. And I was like, oh, and then I pulled up the presentation. I'm like, oh, this looks interesting again. Do you have any visibility on when you'll be able to make a decision on mine construction at Bethania?
Yeah, I mean, we think we'll be able to sort of talk about that pretty soon. In the next few months. I mean, we know we've got a mine there, so we're really behind the scenes working on the project financing angle of it, because we've got to invest a bit to get, we're building a new mill there. Actually, it's the first ever mill. There's no mill there. So we're building a mill. We got that permitted. That's been a lot of the work that we've done in the last couple of years, getting that permitted, tailings, etc. On top of the exploration we've been doing. So we're getting very close now, and I think it'll be an exciting kind of second half of the year for Kuya. You're right. I mean, when we did our RTO, we were very, very fortunate to get a lot of buzz about the company, and in late 2020, and it was a good window in the silver market at the time, and we sort of hit it perfectly, which was complete luck. But we're actually a much better company today, trading at $1 than we were at $3. So it's the way it goes in equities, and it's an opportunity for investors right now.
Where do you stand with the operating permit?
Look, we have a mine that's already permitted. So
okay, all right.
We could go and drill and blast today. We just don't want to do that because we're going to lose all sorts of our margin by toll milling it with someone else. That's what the previous owners used to do. And they did that, for many years, and some years they made a profit doing it. But we've got the opportunity to build a world-class, first-class new mill there, and that's what we've permitted, and we're excited to do it. And we think we can make way more money doing that than anything that's been done in the past.
Great. Now I have a lot more work to do this week than I already have to do. That's great to hear, though. It's an opportunity. And Jorge, you just mentioned that your guidance for production for 2022 is 400,000 ounces of gold equivalent. And when I went through your first quarter production results, and I saw that you were on that run rate, it kind of opened my eyes. I was assuming for 2022 would be below 400. Now I like to look out a little bit further than that. So would it be fair to say, and I know there's only so much you can say, and I wouldn't hold you to any numbers, but just for my own thinking, the way I look at it, when Séguéla is up and running, you're going to be over 500,000 ounces of gold equivalent annually?
We should be moving closer to that mark with Séguéla, which is scheduled to come into production in mid next year, right? So first gold should be coming, May, June, July, first gold. And then there is a ramp up, 3-4 month ramp up. So next year, we're going to start seeing contribution from Séguéla in the second half of the year. And it's one that starts with first gold and then ramps up, right? So we're going to see growth in gold production in 2023. Just like we're seeing in 2022, we're seeing growth in 2023. But the full force of Séguéla, which is going to be a cornerstone asset for the company, is going to be felt in its first full year of production in 2024. So we are in a nice, we're harvesting the portfolio, and it's being able to see protracted growth over 2022, 2023, 2024, with this key project coming into production.
That's fantastic. Thank you.
Well, Dave, also, I sure appreciate you being here today, coming at this from the mining perspective or the analyst perspective. David and Jorge coming from the miner perspective, and I think that's what's nice when you get to see both sides interact. And fortunately, if they are if folks appreciate what your analysis, you do write the Mining Stock Journal bi-monthly, or no, but semi-monthly, twice a month. Bi-weekly. And are we still on track that you're going to start being a regular feature on the show, presenting some of your key findings twice a month? Going to be making a video as I diversify and take a little less time doing a show every day. Hopefully we'll be starting that next week.
Yes, that is correct. In fact, it finally came into the 21st or 22nd century, whatever century we're in. And I bought this, but I can't use it yet. I didn't know I needed a special USB adapter, but that'll be operable for our first video.
Well, that's often how the technology works. I'll bet that adapter has a little bit of silver in there. Hopefully, you might be too good looking for that thing to capture pixels properly. Because again, here's Dave Investment Research Dynamics Kranzler. You see a superstar on Inside the Vault with Andrew Maguire, GameStop, and of course, I couldn't help but notice you're even covering Gary Gensler, who was at one time in running to become CEO of Goldman Sachs. And Dave, I guess you could say with his position as the SEC, maybe he is the CEO of Goldman Sachs now, kind of like an umbrella term. So you can find Dave on Investment Research Dynamics, where he digs into possibly Kuya going forward, talks about Fortuna a lot. So thank you for being here, sir. Again, David Stein of Kuya Silver at kuyasilver.com, and Mr. Jorge Ganoza of Fortuna Silver at fortunasilver.com. And perhaps last and equally important, would like to thank everybody out there who's watching today and allows us to have this show and bring this information and be a part of it. Hope you're all having a wonderful morning out there. And this was a positive start to your day. And with that said, we'll wrap up for now. But thanks again for being here. Hit the share button if you found this helpful, and I will see you again tomorrow.
Thanks. Thanks, everyone.
Thanks, guys.
Bye.
And we